So I was on a phone call with my parents recently, who are in Russia right now, and they asked me the following question: like, what should they expect from the Russian economy in the future? What's gonna happen? Can I make any predictions? Just for practical purposes, um, for them to figure out what to expect. And I said, well, I actually don't know. I haven't studied this topic at all, but let me try to figure something out right now on the fly, on the go. And I said, I'm just gonna have a look at all the economic indicators, and I'll try to predict, understand what's going on and predict what's going to happen. And I was anticipating to see something similar, which we would see in US when the government wants to spend money. I would guess I would see the standard picture. The central bank would lower the interest rates, and the government will issue bonds and borrow money cheaply, and then spend it on war efforts, something like this. And maybe the central bank would also engage in, I guess, how they call it, open market operations, expand its balance sheet, directly inject cash, something like this. But it turns out that I was kind of wrong. So that's not what happened. So here, when I look at all those graphs, I was kind of flabbergasted, and I wasn't able to answer anything meaningfully immediately. And then I decided, okay, I have to read more about it. And then I thought, well, okay, if I already spent much time on reading about it, maybe I should make a video on this topic then. And this is this video. I guess let me start with things which I got somewhat right. It's central bank balance sheet. So as you can see, since the beginning of the war, it was overall somewhat increasing. There was this huge spike, but that actually might be due to the fact that this indicator is denominated in Russian rubles, and the assets which Russian Central Bank held was partially in yuan, partially in gold. So it might be just due to inflation of the Russian ruble. Here is how the price of ruble look like. This is ruble to USD ratio. So as you can see, there was a spike here from its standard price at the beginning of the war, and then it kind of recovered. Now, well, we will see how it was achieved. So yes, but the overall trend is still upward, right? So the total amount of assets went from 52 trillion rubles to like 70 trillion rubles. And I wondered, did it have any impact on the money supply? So if you look at, for example, M2, we see that since 2022, M2 increased significantly. Now, look, there are different ways to measure the money supply, right? The M0 is just the base money plus central bank reserves, and M1 is usually cash plus um, deposits in the checking accounts. So the usual standard money, but they, as you can see, they also increased. M2 includes also a thing it's called money market funds, so slightly less liquid assets and savings accounts. So they both increased around like maybe 50%. And yeah, I know people, some people might think, well, that does increase in money supply lead to inflation? Because, well, this is like a controversial topic in economics. And yeah, so we could look at inflation as well. And as you can see, yeah, so the prices, yeah, consumer price index, I would say they increased like by 50% in this 4 years of war. So yeah, there was some inflation. However, I could say, well, there was already an upward trend anyway. Okay, but now the things which are kind of very, very mysterious to me. Because I thought, well, where is the government borrowing, right? So this is government debt to GDP ratio. And Russia didn't have very big debt to GDP ratio when compared to US, for example, but it's kind of expensive still. And we see some increase in 2021 from 12% to 17%, well, 12.5 to 17.6, but since then it doesn't go up that much. It stays approximately the same. So where is the spending on the war, how it works? And with interest rates, it was kind of even more interesting. This graph, it's here. So yeah, as you can see, the central bank actually jacked up the interest rate at the beginning of the war from like 7%, right, what it was here, to 20%. And I was kind of puzzled, like, why they did this? Okay, my guess was probably to fight inflation, right? Because we see that here it was clearly some sort of panic. And they were kind of scared. I think that's what happened. They were trying to fight that, and for whatever reason, the government didn't need to borrow for war, so they did it like without any problems. But then I guess they realized this is kind of too much. 20% is just not something which regular businesses could endure, and they, you see, lowered it back. But I guess because of all the spending they need to have, at some point the inflation starts to go up, and they start to increase them again. But yeah, it's a bit strange. This is kind of chaotic policy. So I was confused about all that, so I decided to like ask AI first, like what's going on here. Maybe he would help clarify this for me. So yeah, ask him how Russia essentially funds its war efforts. Yeah, the first thing he mentioned, of course, is oil and gas revenues, but that's like a standard. And of course, there were problems with sanctions. They have to shift the exports towards China and so on. However, Europe still buying oil and gas, I think. So yeah, look at the graph. Russia's fossil fuel export revenues. They're still kind of fine. declined, of course, from 2022 to 2023, but then they're kind of steady. Then there were tax increases, which I haven't thought about indeed. Russia hiked taxes aggressively. So corporate tax rose from 20% to 25%. Income tax became more progressive. Profit tax were imposed on energy sectors. Some value-added tax increased. And what is mineral extraction taxes are also raised. So, okay. But then there is another thing, another source which I didn't know about, is actually that they have National Wealth Fund. It's like a rainy day fund, has been depleted to finance deficits. So they just held money in it, and I guess, well, they used like around half of it. With all the adjustments, these economists, they calculated they depleted approximately 50%. I didn't expect that. And now, like, the final point was actually the most surprising, which I haven't thought about before. This off-budget financing. Like, a key hidden strategy involves state-directed preferential loans through major banks to war-related businesses. Since mid-2022, this drove 36 trillion ruble surge in corporate borrowing, much of it implicitly state-guaranteed. So Grok cited this report by a person named Craig Kennedy, who uncovered this scheme. So I think I'll read you maybe the introduction. So will give you the idea of how it works. And it's kind of interesting story. He writes it like as a detective story, so it's kind of fun. Where is Russia war debt? This is one of the puzzles of Russia's full-scale invasion of Ukraine. Large wars normally go hand in glove with heavy state borrowing. Indeed, Western banking arose in part to help states pay for increasingly expensive wars. And yet, Russia, despite waging Europe's largest war in 75 years, appears to be paying nearly all its war costs out of pocket from current tax revenues. At least, that's the impression one gets on initial inspection of the numbers. Federal budget deficits have been remarkably modest, under 2% of GDP 2020-2024. Actually, I don't know, this website gives different numbers, but still, look, it's not too high, I don't know. Actually, it's deficit, but the debt is okay. It's different. It's like a accumulated deficit, but anyway, so it's not big. So too has state borrowing used to cover them. At the same time, Moscow budget revenues have grown very little in real terms in 2021, and sanctions have denied Russia access to most of its sovereign savings. So there were assets frozen on top of that. So how then is Moscow covering the extraordinary cost of what looks to be a very expensive war? Where is the money coming from? Even the Soviet Union imposed war bonds on the public. Where are Russia's special military operation bonds? Yes, Western analysts of Russia's wars finances often focus too narrowly on the federal budget, overlooking a large off-budget components in Russia's war strategy. Close observers of Russia's budget will be quick to respond that the defense part of the budget has been growing much faster than the budget itself, thus boosting funding for the war. This observation is undeniably true, but it also illustrates a methodological problem in how we have been analyzing Russia's war finances. Yeah, we have been laboring under the assumption that Kremlin runs all revenues and costs for the war through the federal budget. Yeah, so consequently, all matters are viewed through the lens of the budget, and all questions are answered with reference to the budget. For example, when we ask, where is Russia war debt? The answer comes back, there is no substantial new debt in the budget, so it might not exist, must not exist. Yeah, but is it reasonable to limit ourselves to the budget when assessing Russia's war finances? After all, any IMF official or scholar of state capitalism will tell you the boundary between public finances and private markets is often blurred. Almost every state transgresses this boundary from time to time to direct private capital towards political priorities. Some, however, do it more frequently than others. Yeah, that's exactly what we expect, right? In principle, from some country like Russia. Yeah, okay, so he speculates why would Russia be different, yeah. Yeah, so he offers fresh look on war foreign strategy, and once we do that, we begin to find the data and as evidence showing that Russia's illusive war debt does in fact exist. In fact, appears to be quite substantial. It's simply not sitting on the government balance sheet. We'd normally look for it. Instead, it's somewhere unexpected, lightly camouflaged, but otherwise hiding in plain sight. Okay, so here are the main conclusions. The Russian state has been drawing discreetly but heavily on financial resources from outside the budget to finance war effort. This off-budget funding strategy is a material part of its overall war funding strategy. Okay, so he also points out some flaws, but well, you see what it means as soon as you understand the scheme. Yeah, here he just gives an example of how it works with Gazprom. It's not even related to war. He just says that he noticed it by accident. Yeah, so after the Kremlin crippled Gazprom's core business, exports to Europe, the company's once mighty gas division was hemorrhaging cash. Those losses, in turn, threatened to trigger a debt service crisis. Well, okay, blah blah blah, and so on. How would Gazprom manage to start in that load? Yeah, as Russia's most strategically important company, Gazprom's cash problems were not only a challenge for management, but for the government as well, which owns a controlling stake in the business. My question was, how would the state respond to the funding crisis? Would it liberalize domestic gas prices? No, that's way to inflation and risks social unrest. Would it cut the gas giant taxes? No, the federal budget was already running a deficit. Instead, the government solution was more radical. Have Gazprom do something that's rarely advisable for debt-laden company with a structural cash flow deficit. Borrow more money. And that's exactly what the company did. And at a record high interest rates. Since 2022, the group issued nearly 40 separate ruble bonds in Russia's local markets, raising 1.4 trillion rubles. By late 2024, its borrowing cost had topped an eye-watering 22%. Okay. Gazprom slow motion cash flow train wreck is still paying out, but that's a story for another day. Yeah, so so the conclusion: the state is pragmatically but recklessly using Russia's credit markets to channel money quickly where it's needed, but with little apparent regard to how the debt gets repaid. Yeah, uh, so let's see. So that's the way to get like cash quickly, and yeah, of course, there's the main point is yeah, why it worked, right? Um, essentially because of government backing. You see, uh, Russian markets keep lending heavily to trouble Gazprom um, because they see it as too big to fail. It's just a tiny wild government debt, essentially. Um, Based solely on Gazprom rating credit statistics, a sober credit committee might think twice before lending the cash to the cash-strapped company. But for special companies like Gazprom, credit worthiness isn't just the sum of cash flows. Intangible factors also come into play. As Russia's most strategically important companies and quasi-sovereign borrower, it's the quintessence of too big to fail. And that's pretty much what Russia credit ratings agencies have been saying in the reports when explaining the AAA rating from Gazprom's ruble bond. Ignore the company fundamentals. The state will never let this company go under. And this explains why the market keeps taking up new Gazprom issuances. In the eyes, it's just tiny veiled government debt. Mm, yeah, so the state in effect is imposing losses at Gazprom by making it to supply the Russian market at deeply discounted prices and then having the company cover those losses, borrow heavily in the market. Meanwhile, the market is willing to lend because it believes the state will bail out Gazprom if it gets into trouble. Okay. So the idea is kind of clear here, but now he says that when the war started, uh, this strategy was expanded beyond just Gazprom. There has been an anomalous and large 71% surge in corporate debt since mid 2022, up to 36 trillion rubles. Um, Yes, so the situation of Gazprom reveals how the state is using the corporate credit markets to address funding crisis by having them lend money directly to companies that need it. And for sophisticated, too big to fail company like Gazprom, that's not a huge surprise. It's a pragmatic stopgap solution, especially if you think you can scare Europe into resuming Russian gas purchases with hollow threats of sending it all to China. What did come as a surprise, however, was the second thing I came across in my Gazprom research. It turns out that Gazprom isn't the only Russian company borrowing with abandon. Yeah, when you dusted off the central bank's much neglected data set on Russian corporate borrowing, something quite remarkable and unexpected appeared. A perfect hockey stick, along flat trend lines, and suddenly it inflects upward. Yeah, here it is. So, indeed, since the beginning of the war, it just went up. Its scale is very large, it dwarfs key budget metrics like oil and gas revenues, the defense budget, and incremental government borrowing. Okay, just compare it to other sources of revenue. I mean, sources of war budget, war spending. I don't know how you call it. Moreover, close examination data revealed that borrowing was highly concentrated in sectors providing the goods and services you would need for wage and large-scale land war. Okay, it consists of 4 core arms manufacturing and 11 additional sectors providing essential goods and services required by state for war. Okay. Yeah, so here he compares these companies to Gazprom. So the Gazprom is kind of a big and reliable company, right? You say, but it doesn't make sense. Why would you load up a lot of corporate balance sheets with war debt? Russia's core arm manufacturer are nothing like the sophisticated ones cash-rich Gazprom. They are notoriously bad credits, living hand to mouth of underpriced government contracts and perpetually on the brink of insolvency. As for the legion of new companies enlisted into war effort, there might be more efficient business, but their wartime contracts would dry up as soon as the shooting stopped. Why would banks take on so much risk? How is it going to get repaid? Not all those borrowers are too big to fail. How could bank credit committees sign off on such madness? Mm, yeah, actually, here he's talking about how they did it even before for the rearmament program in 2007. It's like a historic remark, and how it actually backfired back then. How it required frequent bailouts, yeah, because the military companies not able to pay out those debts. Yeah, and here's what they did in 2022, before, during the war already. You'll see this timeline. The Kremlin greatly expanded this off-budget defense funding scheme in 2022, even passing legislation obligating banks to lend on terms unilaterally imposed by the state. Yeah. To work, the banks needed to be on board, since it was their credit creating capacity that allowed the scheme to work. But the banks appear to have sustained losses in 2019-2020 bailout had reportedly soared on lending to the problematic sector, which is this military companies, almost insolvent, right? When it comes to getting the banks to cooperate, the Kremlin, of course, can always twist arms and call in favor, but doing that at scale is cumbersome and inefficient. So, to make sure the banks didn't drag their feet about taking more exposure to bad credit risks, the Kremlin did something quite remarkable. In December 2021, it quietly introduced legislation legally obligating banks to extend preferential loans to defense-related companies on terms unilaterally set by the state: size, maturity, credit qualifications, everything. In short, on the eve of its full-scale invasion of Ukraine, the Kremlin was formally seizing control of defense-related lending at Russia's leading banks. The law was passed and signed into effect on February 25, 2022, as Russian armored columns continued to pour across the Ukrainian border. Okay, so here, this was actually in introduction. Here he gives like outline of the report. In chapter 1, he talks about large-scale corporate credit research and benchmarks against the federal budget. Yeah, that's already understood. In chapter 2, examiner striking discovers the Central Bank of Russia made during its ongoing struggle to tame high inflation by cooling corporate borrowing, as it hiked the key rate from 7.5 to 21%, where it was. Yeah, here. Remember what happened? It observed a highly heterogeneous response by borrowers. Debt levels among companies borrowing at normal market terms stopped growing as expected. Nobody wants to borrow 21%. But borrowing by a second group of companies enjoying state-backed preferential loans continued to surge upward, insensitive to rising rates. So yeah, because they essentially they were kind of backed by the government. Chapter 3 recounts the rise of systematic state-backed preferential lending to fund defense sector. It tells a larger untold story of the credit scheme briefly described above, including a remarkable twist in the plot that occurred in late 2021, when the Kremlin was planning funding it for its full-scale invasion of Ukraine. Yeah, so it's already what I talked about. They passed this legislation to seize control of the banks in the lending schemes. It was the classic state capitalist power move. Yeah, so here he analyzed how big is it, and he came to the realization that it's kind of material part of Russia's war funding strategy. Yeah, and in the last, I guess, chapters, he analyzed what it could do for the future and how sustainable it is. Yeah, so I don't know whether... yeah, I mean, I'm not gonna read the whole report, but I think you could read it for yourself. I think it's quite interesting. Here, for example, is the picture of how well, different entities respond to the rates hikes. This is interest rates graph, and you see most of the borrowing slow down, except for this preferential corporate debt, which still was going up. Yeah, and he just goes on to explaining what was discussions and arguments in Duma. Essentially, the standard problem where this high interest rates are kind of unbearable for normal businesses, so they have to decrease them back, but because you still have like this unnatural state-backed loaning happening, the inflation was going up, so they eventually start to increase rates back up again. Yeah, so yeah, I guess the report is very big, and here they analyzed how the state debt would look like if you actually make it open, right? Like if this was borrowed explicitly by the government. Yeah. Now, I wanted to mention only that I already came across this kind of scheme before in my study of history. And the place where I found it was actually in Nazi Germany under Hitler. So the scheme proposed by Schacht, the Hitler's central banker, was very similar. Here is a good review about it. So the idea is, well, you want to hide your military spending. That was Schacht's reasoning. One of the reasoning. He wanted to make hidden non-inflationary war spending. And for that, they created this fake MEFO company, which were issuing its own bonds with high interest rates and 5 years of maturity. And people knew that this MEFO company will get bailed out by the Reichsbank in case it fails. So they were willing to purchase those bonds for actual cash, which they then was used to fund the war machine. So yeah, here is the...
See my recessions video for more details. So I would have to be insane to take my savings and put them in the stock market. Therefore, because of this fear and economic uncertainty, my cash in my rainy day fund is classed as idle by the central planners. Well, the same thing happened in Germany. The businesses and businessmen were reluctant to spend or invest their cash, so they kept it in their safes. And that's also why they weren't spending it. In times of economic uncertainty, people save, which is the correct thing to do. But Schacht and other central planners today want your cash, so they come up with schemes to trick you into handing over your cash. One such scheme was the MEFO bills idea. The dummy MEFO company would issue MEFO bills to armaments contractors in exchange for their cash. But why would the armaments contractors trade their cash for MEFO bills? Why would they want MEFO bills in the first place? Well, it's because the MEFO bills had an interest rate of 4%, which made them attractive to investors. And this is the crucial point that you need to grasp. They were seen as an investment because of their higher than average interest rate and the fact that they were guaranteed by the state, which made them seem like a safe investment during a time of economic uncertainty.
Yeah, so essentially they were like circulating as like alternative currency in some sense. So the company could present them to the bank, and bank would give actual real cash instead, we could sell it. And because the bank was sure that it will get repaid. So yeah, it's like an interesting historic analogy, but from it you could also guess what's gonna happen, right? Eventually the bills come due and you have to pay. It's basically a gigantic bubble. So Hitler ended up very poorly. As you probably know, he tried to invade other countries and seize the resources, goods, assets to repay this kind of debt. But this militarism and expansionism couldn't work forever, and this has to end. So people are kind of predicting something similar for the Russian economy, but it's not clear when it's gonna happen. Yeah, Russia's economy has entered the death zone. Alexander Prokopenko wondered how much longer it can go on metabolizing its own muscle tissue. So yeah, what happens when you do this is you actually drain other sectors of your economy of capital. Yeah, the capital outflow out of all productive sectors of the economy into the military sectors. But the goods and services produced there in the military sectors are getting destroyed on the battlefield. So eventually the economy kind of shrinks and the quality of life deteriorates. And that's, I guess, what they call the death zone. Yeah, there's a video about it too. To know what it's going
And we have a really interesting piece in this week's issue by a Russian economist who was once at the Russian central bank. And she lays out, and she uses a brilliant metaphor, that it is like a climber who gets altitude sickness after, 8,000 meters. You go into the death zone where essentially your body is using its resources faster than it can replace them. And that's what's happening to the Russian economy. All resources are going to the war effort. The rest of it is atrophying, is becoming, ever more lawless. There is no labor for it. Arkady sort of describes it extremely well in a briefing that he's put together for this week's issue. And it's not, and Arkady, tell me if you disagree, but when reading your briefing, I didn't think that this was an economy that was about to collapse tomorrow morning, but it was an economy that is fundamentally changing and weakening in a way that will actually be irreversible and possibly irreparable.
Yes.
So yeah, again, with all these predictions, or this is going to collapse soon. Yeah, as you know, it never really works. It's hard to make such guesses. Somebody was saying it's going to collapse immediately after sanctions, but as you know, all Keynesians, they kind of ignore this structure of capital. So somebody say, oh no, Russia's war spending actually boosts its economy. It's, war spending helps because it's just government spending, because that's what Keynesians like. But no, eventually this bubble of government spending will burst and there will be problems. As usual, we don't know when it's going to happen. So I guess I will end here, and you could look at this report for yourself for further reading.